Welcome to Life Skills Channel, a place to share knowledge and effective investment skills for all smart investors. Have you ever wondered how to own a part of leading technology companies like Apple, Google, or Tesla? These giants not only shape the future, but also bring huge profit opportunities to investors. Today, we will explore an interesting topic together: investing in technology stocks, great opportunities, and potential risks. This is not only an investment trend in the US, but also a way for you to participate in the global technology revolution. However, investing in technology stocks is like walking on a thin cable. You can reach the top, but also easily fall into danger if you do not understand clearly. In this video, we will help you have a comprehensive view of the opportunities and risks in this field, through emotional real-life stories from investors in the US. Stay until the end of the video to discover the secrets and advice specially designed for you. Part 1. Attractive profit opportunities. 1. Rapid growth. The technology industry is one of the fastest growing sectors in the world. Technology companies often have much higher growth rates in revenue and profits than traditional industries such as energy or manufacturing. Amazon as an example. From a small online bookstore in 1994, Amazon has become a global e-commerce and technology empire. Amazon's stock price has increased more than 1,000 times in the past 2 decades. This is a testament to the incredible profit potential that investing in technology can bring. Real story. John, an office worker in Seattle, invested $10,000 in Amazon in 2000. At that time, his friends thought he was risking a lot of money on a book company. But John had a vision. Now his investments are worth millions of dollars, allowing him to retire early to fulfill his dream of traveling the world. Number 2. The power of innovation. The technology industry is not only growing strongly, but also leading the way in innovation and creativity. A series of breakthrough products and services have changed the way we live and work. Smartphones, social networks, and most recently artificial intelligence are all typical examples. Innovation is the driving force behind the revenue and stock value of technology companies. Apple is a shining example. When the iPhone was launched in 2007, no one expected it to reshape the mobile technology industry and create one of the most successful product lines in history. Investing in Apple at that time has brought outstanding returns to investors who saw the potential early. Real story. Maria, a single mother in California, invested in Apple when the iPhone was first released. She believed in Steve Jobs' vision and the disruptive potential of this product. Thanks to her determination and faith, Maria's investment has paid off many times over, enough for her to buy a nice house and pay for her children's college tuition. 3. Long-term trends. Technology is no longer a single industry, but has become an indispensable part of every aspect of life. From the way we communicate, work, to the way we entertain, technology is changing every aspect. This brings a long-term growth trend, ensuring sustainable profit potential for investors who seize the opportunity. For example, the development of artificial intelligence and automation is not limited to the technology industry, but also affects healthcare, education, and even agriculture. This increases the value of technology companies that are leading in these areas. Real story. David, a high school teacher in New York, invested in Microsoft in the 1990s. He believed that personal computers would become an indispensable tool in the new era. Although he had to wait for many years, his patience and foresight helped David accumulate a significant amount of wealth. This money not only helped him improve his life, but also invested in other technology companies. Other factors to consider. In addition to the above factors, investing in technology stocks also benefits from 1. Globalized market. Technology companies are not limited to geographical scope, but can serve customers globally, expanding growth potential. 2. Opportunities from startups. Besides the giants, technology startups also bring great profit opportunities, although with higher risks. 3. Government support. In the US, policies that encourage innovation and protect intellectual property rights have created an ideal environment for the technology industry to develop. Conclusion. Investing in technology stocks offers outstanding profit potential thanks to their growth rate, innovation power, and long-term trends. However, thorough research and a clear investment strategy are prerequisites for success. Stories like John, Maria, and David are proof that great opportunities await those who dare to act. But don't forget, great opportunities always come with risks, and we will explore this in detail in the next section. Stay tuned. Part 2. Potential risks. 1. High volatility tech stocks are very attractive, but they also come with high volatility. The stock value of these companies often changes dramatically due to a single news item, financial report, or even market sentiment. This makes investors susceptible to up and down in just one trading day. A prime example is Tesla, where the stock price can skyrocket or plummet just because of a tweet from CEO Elon Musk. Real story. Peter, a college student in Texas, invested all his savings in a tech startup in the hope of changing his life. Initially, the stock price rose rapidly, making him dream of a rich future. However, Just a few months later, the company encountered financial difficulties and went bankrupt. Peter lost all his savings, forcing him to work multiple jobs to pay for his studies. Lesson: investors need to understand that sharp price fluctuations are not only an opportunity, but also a great risk. Investing all your capital in one company without diversifying your portfolio can lead to serious consequences. 2. Fierce competition. The technology industry is where competition is fiercest. Companies must constantly innovate to stay relevant, as a new technology or a potential competitor can knock them out of the game. This is no place for companies that can't adapt quickly. Real story. BlackBerry was once the dominant brand in the mobile phone market, known for its physical keyboard and high security. But when Apple introduced the iPhone with a touchscreen and a more user-friendly interface, BlackBerry failed to adapt to the trend. As a result, they were surpassed by Apple and Samsung. Their stock price plummeted, and investors suffered heavy losses. Lesson: investors need to evaluate a company's ability to innovate and its long-term strategy before investing. Failure to closely monitor technology trends can result in a failed investment. 3. Tech bubbles. History has shown that the technology industry is not short of investment bubbles, periods of time when stock prices rise unreasonably high before collapsing. The dot-com bubble of the late 1990s is a prime example. At that time, a series of technology companies were valued sky-high simply because they were associated with the phrase internet. But when reality proved that most of these companies did not have a solid business model, the bubble burst, causing huge losses for millions of investors. Real story. Sarah, a young investor in San Francisco, invested in many small technology companies during the dot-com boom. As stock prices continued to rise, she thought she had found a way to get rich quick. But when the bubble burst, the companies she invested in went bankrupt one by one, causing her to lose almost all of her savings. Lesson: investing in technology should be based on the true value of the company, rather than chasing trends or irrational expectations. Careful analysis and informed investing are paramount. 4. Legal and policy risks. Technology is an industry that is heavily regulated by governments around the world. Changes in policy, laws, or antitrust lawsuits can cause major shocks to stock prices. For example, large companies such as Google or Meta often face investigations into monopolistic behavior, raising concerns about huge fines or breakups. Lesson: investors should closely monitor news related to law and policy, especially issues related to monopoly, data privacy, and tax. 4. High investment costs for individuals. Tech stocks, especially those of large companies, are often priced higher than other sectors, making them difficult for many retail investors to access. While modern trading platforms allow for the purchase of fractional shares, investing in companies like Amazon or Alphabet still requires a significant amount of capital to generate significant returns. The takeaway: instead of putting all your money into one expensive tech stock, retail investors can consider technology-focused ETFs or index funds to reduce risk and gain access to a more diversified portfolio. The bottom line: investing in tech stocks can yield superior returns, but there is no denying that there are risks. High volatility, fierce competition, and the risk of bubbles are factors that any investor must be aware of. Stories like Peter, Maria, and Sarah are a reminder that caution and knowledge are the keys to success in investing. To minimize risk, always analyze carefully and diversify your portfolio. Let's move on to the next section to discover effective investment strategies that you can apply today. Part 3. Effective investment strategies. 1. Long-term investment. Investing in technology stocks is not a game for those who want to get rich quickly. Success in this field requires a long-term vision, patience, and the ability to focus on the company's real growth potential, instead of being caught up in short-term fluctuations of the market. Leading technology companies often have a development strategy that lasts for decades, and their value will increase gradually over time. Real story. Warren Buffett, the legendary investor, bought Apple shares in 2016 for a large amount of money. While some may think this was a late move, Buffett saw the power of Apple's brand and its ability to generate sustainable profits. To date, this investment has become one of his most successful deals, bringing huge profits to Berkshire Hathaway. Lesson: look beyond short-term price fluctuations. Focus on the company's true value and long-term vision to achieve sustainable profits. 2. Proper portfolio allocation. One of the most basic principles of investing is not to put all your eggs in one basket. The technology industry, while attractive, is still risky. To minimize the risk of loss, you should allocate your capital to many different technology companies in areas such as artificial intelligence, e-commerce, biotechnology, or cloud software. Real story. Sarah, a private investor in Florida, adopted a portfolio allocation strategy. She invests in large technology companies such as Microsoft, Amazon, Google, and Facebook. When one company struggles, the profits from other companies help her make up for the losses. Thanks to this strategy, Sarah not only protects her capital, but also optimizes her profits in the long term. Lesson: diversification not only helps you reduce risk, but also creates opportunities to take advantage of growing trends in many different areas. 3. Do thorough research before investing in any stock, especially technology stocks. Thorough research is a prerequisite. You need to understand the company's business model, financial situation, management, and growth prospects. This information will help you make informed decisions and avoid investment traps. Real story: Michael, a software engineer in Silicon Valley, always takes the time to research before investing. He reads financial reports, follows industry news, and attends investment forums. Thanks to this careful preparation, Michael has avoided large losses from technology companies that do not have a solid business foundation, and achieved high returns from companies he believes in. Lesson: never invest based on emotions or rumors. Thorough research is the only way to ensure that you understand the company and its potential. 4. Keep an eye on technology trends and innovations. The technology industry changes very quickly, and new trends are constantly emerging. To optimize your investment, you need to stay updated on innovations such as artificial intelligence, blockchain, or biotechnology. This will not only help you realize the potential of new companies, but also allow you to re-evaluate your current portfolio. Lesson: always keep an eye on emerging technologies and assess whether they will impact your current investments. 5. Control your emotions and invest with discipline. Successful investing depends not only on knowledge, but also on the ability to control your emotions. Fear when the market drops sharply, or greed when stock prices soar, can lead you to make bad decisions. Discipline in investing helps you stick to your strategy and avoid impulsive actions. Lesson: set clear rules for buying and selling stocks. Don't let emotions dictate your investment decisions. 6. Take advantage of investment tools and resources. There are many tools and resources available to help you analyze and manage your portfolio. Platforms like Yahoo Finance, Morningstar, or investment apps like Robinhood, E-Trade provide detailed information about the market and each company. Lesson: use technology to support your investment process. These tools not only save time, but also provide detailed and useful information. 7. Seek professional help if you're just starting out or do not feel confident enough. Seeking advice from financial experts is a smart choice. They can help you build an investment portfolio that suits your financial goals and risk appetite. Lesson: don't hesitate to ask for professional advice if you need it. Professional advice can be the key to your success. Conclusion: effective investment strategies in technology stocks require patience, thorough research, and discipline. Invest for the long term, allocate your portfolio appropriately, and constantly learn to adapt to market changes. Success stories like Warren Buffett, Sarah, and Michael are proof that careful preparation and a smart approach will bring worthy results. Apply these strategies now to build a solid investment portfolio and achieve your financial goals. Part 4. Outstanding technology trends. 1. Artificial intelligence, AI. Artificial intelligence is a leading trend in the technology industry, with the ability to be applied in all fields from healthcare, education, to transportation. AI technology not only helps automate processes, increase productivity, but also opens up unprecedented solutions. In healthcare, for example, AI is used to diagnose diseases from images, while companies like Google and Microsoft use AI to improve search engines, advertising, and cloud computing. NVIDIA, a leading graphics chip maker, has also become a focus of investors thanks to its AI-optimized products. Investment potential. Leading companies in this field, such as Google, Microsoft, and NVIDIA, are attracting large capital from investment funds and individual investors, thanks to the sustainable development and long-term growth potential of AI. 2. Virtual reality, VR, and augmented reality, AR. VR and AR are two technologies that are changing the way we experience the world. From gaming, watching movies, to shopping and traveling, VR and AR are creating completely new spaces. Meta, Facebook's parent company, has invested billions of dollars in Metaverse, a virtual world that combines VR and AR. Apple is also not out of the race when launching an augmented reality device, helping users interact with the world around them in a new way. Investment potential. With the growth in the entertainment, education, and e-commerce sectors, companies like Meta and Apple promise to bring large profits in the long term. 3. Blockchain and cryptocurrencies. Blockchain is the technology behind cryptocurrencies, but its applications go far beyond that. Blockchain is being used for data security, smart contracts, and supply chain management. Cryptocurrencies like Bitcoin and Ethereum are not only investment vehicles, but also tools to promote the development of this technology. Investment potential. Despite the high volatility of cryptocurrencies, investing in blockchain development companies like Coinbase, Binance, or major blockchain projects like Ethereum remains an attractive option for venture capitalists. Conclusion. Current technology trends, from artificial intelligence, virtual augmented reality, to blockchain, are not only changing the way we live, but also creating huge investment opportunities. Learn more about the leading companies in these fields to build the right portfolio and optimize long-term profits. So investing in technology stocks is an exciting journey, with great profit potential, but also full of challenges. The profitable opportunities from leading companies such as Apple, Google, and Microsoft are clear evidence of the power and growth potential of the technology industry. However, it cannot be denied that this field also has many potential risks, from stock price fluctuations, fierce competition, to the risk of a technology bubble. The key to success in this field is thorough preparation. Understand the opportunities and risks, build a long-term investment strategy, and always update the latest technology trends. Patience, discipline, and knowledge will help you maximize the potential of the technology industry to achieve your financial goals. Are you ready to enter the world of technology investing? Start today by researching potential technology companies and try your hand at building your own investment portfolio. Don't forget to share this video with your friends and family so they can also explore this exciting investment field. If you have ever invested or have any questions, leave a comment below so we can discuss and share our experiences.